Covering the economy tonight on the big board, all the arrows pointing up. The Dow climbing nearly 430 points just after falling more than 600 points the day before. What a roller coaster ride. The NASDAQ up more than 100, the S&P up more than 50 points. We're joined live now by CNBC's Scott Wapner. Scott, thanks for being with us. Talk about what underpinned today's rise in the markets.
Well, I think the market in and of itself was due for some kind of relief rally after the carnage we've seen over the last several days. And then even though it took a while, the market seemed to rally around what the Federal Reserve had to say after its 2:15 decision this afternoon, because that's when you really saw, and it took a little while, but in the last half hour of trading, even the last 15 minutes, you saw what looked like a meteoric rise to end up with that 429-point gain. The Federal Reserve essentially saying, yes, we acknowledge the economy is slowing a little bit more than we expected, but we're going to be here to do whatever we can do, at least in the short term. They said that they are going to keep interest rates low, and the Federal Reserve really never tries to put a date on things. They've been saying for an extended period of time. Today they came out and said the current conditions warrant exceptionally low rates until mid-2013. That was a sign, and though it took a while, that the Fed was going to be there for the markets. At least that's the way it interpreted that, because you saw what happened in the market.
Scott, very briefly, your advice for the average investor who's still got a bad case of the shakes after the last several days.
Yeah, it's hard not to, and first and foremost, it's get in touch with your financial advisor. Try and take the emotion out of it. We saw so many people make the same mistake in the financial crisis of 2008. Stocks plunge, you pick up the phone, you call your financial advisor, or you do it yourself and you sell stocks at the bottom. It's the biggest mistake that individual investors make all the time. They sell at the bottom, they buy at the top, and then they regret it. You've got to try and take the emotion out of it. I know it's difficult. It's difficult for the people who are covering the story, but you have to try and take the emotion out of it and make that call to your financial planner and know exactly what your investments are, where your allocations are, what do you have in stocks, what do you have in bonds, what's your time horizon, how long do you need to be invested, and when are you going to need the money.
Scott Wapner with CNBC. We thank you for your perspective, and be sure to stay tuned for NBC Nightly News for the latest on the markets from Wall Street to Main Street. CNBC